Hi everyone, good evening. We are here to announce the launch of our new product, Multi. With our constant quest to finding solutions to your problems, we have come up with this new offering with the intent to solve for diversification, risk management, and streamlining of investments for short tenure. You will be one of the early folks to get access to this product. We look forward to your valuable feedback in making this product a success. We are striving to make it better every single day and will appreciate your support in bringing this to masses in India. I would like to welcome Soumya, our co-founder at Tap Invest, to uncover this product for us and address the questions towards the end. Please feel free to type your questions in the comment section during the webinar. Handing over to Soumya.
Yes, thanks a lot, Soumya. Uh, warm welcome to everybody who could take time out today and join us in our launch session for Multi. I'm very privileged and honored to be launching this product for all of you today. And I am also excited to tell you all that you are the first ones who we are giving the access to this product to. We wholeheartedly believe that the partner ecosystem, the wealth manager, IFA ecosystem in India is very instrumental in taking these innovative fixed investment products to masses. And therefore, we want you all to be the first ones to access this product that we are launching today. Before we start, let me just take a quick moment to talk a little bit about what Tap Invest is and what we do. Tap Invest is nothing but a fintech in the fixed investment space where we are trying to innovate and provide fixed investment options such as bonds, P2P, invoice discounting, asset leasing, and many more to retail investors in India. We all know that these products have been accessible to a lot of HNI and the large ticket size investor base in India for a very long time. But with Tap Invest, our vision is to make all these products available to retail investors as well and open the whole world of fixed investment space to them. With our products, we try to address five major characteristics or features. One is we want to enable diversification of their portfolio with stable and predictable returns. At the same time, we want to give them the liquidity and flexibility of recovering money and using it as and when they want. We want to do it via a transparent and accessible platform that we're trying to build, which is tapinvest.in. And we're also taking care of risk mitigation through asset-backed investments and building in a lot of security measures which ensure that your product or your investment is safe at the end of the day. Moving on, let me just highlight the three major offerings that we have on the product right now. So the first two are something which we have structured and manufactured in-house, and bonds is something that we are sourcing from the market and making it available to retail investors, which otherwise they don't get access to. So asset leasing is a very simple product in which, as an investor, one can buy fixed assets such as laptops or furniture or water purifier and rent it to companies such as Drink Prime or SharePal or Log9 that we are working with, and earn a fixed monthly rental returns along with an assured buyback at the end. So there is a monthly rental component followed by a buyback. Usually the tenure of this product is anywhere between 12 months to 30 months. And it is helpful for people who want to generate regular side income of sorts. In this product, you earn an IRR of anywhere between 18 to 20%, including the rental and buyback over the tenure. This is a slightly long-term product, fixed income, helpful for people who are looking to diversify beyond the existing products and want to set up an additional income stream. The second one that we have today is invoice discounting. It's a short tenure product wherein it's usually used by companies who have their receivable amount stuck in certain cycles of 30 days to 60 days. So with the help of retail investors, they can actually raise these funds upfront. You get to invest in the invoices of blue chip companies. We have invoices from companies ranging from JLL, HUL, so on and so forth. And your initial investment goes in, you make some return, usually in the range of 12 to 14% of IRR, and you recover the money one shot at the end of 30 days to 90-day period. It's a short tenure product, helpful for people who want to park their money in the shorter run before they find out a better opportunity to invest it in the long run. And the last one is bonds. I'm sure a lot of you would be already aware of this product and would probably be dealing in this product already. We currently have some corporate bonds on offer. These are unlisted bonds, which we source from the market at special rates. And if the quantum investment that you want to do is sizable, we can even negotiate these rates for you. Usually this is in the range of 13 to 17% that we are currently able to offer. And it's again a medium term to long term product, ranges between 9 months going up to 30 months also in some cases. These are the overall offerings that we have at Tap Invest. But today we want to talk about a very specific product, which is multi. Before I come to that, I want to introduce to you who is the team who has built this product, who are the people behind it, and who are our backers. Tap is a fintech formed by 3 co-founders. I am one of them. My name is Soumya. With me, I have Nishchay and Himanshu. Both of us, all 3 of us know each other for over 5 years now. We have studied at similar organizations. We worked together, and all of us have known each other for a very long time now. We share a common interest in the investment space, and therefore we wanted to build something which, first of all, we wanted to use, and then also share it with a lot of other investors who are keen just as us. In our journey, we've been fortunate to have very strong backers. We have very large funds such as TurboStart and Snow Leopard Ventures, which is Kirloskar family office, as well as Upsparks. These are the funds which are backing us. Along with that, we have strong angel investors such as Kunal Shah of Cred, Kashyap, who's building Credit Star, a P2P fixed income product in the UK, Bipin Preet Singh, who you all know, founder of MobiKwik, and Mandeep, who's the founder of Cashify, amongst many others. Now, let me touch a little bit upon invoice discounting as a product that currently we're talking about. So let's take a very simple scenario. Imagine that there is a company XYZ. They have raised an invoice on a large company, let's say an HUL or an ITC, for providing raw material supplies to them. And the normal credit cycle that they have from ITC or HUL is, let's say, about 60-day period. Which means that if they raise a 1 crore invoice in this month, they will only get the proceeds for it a couple of months down the line. And therefore, their 1 crore is stuck for 2 months. But they will have requirement of cash flows to procure their own raw materials or pay salaries to their employees or manage such other working capital requirements. What they do is they come to us, they share that invoice with us. We do a proper thorough background check of the company as well as the anchor, which is HUL or ITC. We also do a diligence check on the invoice, the veracity of the invoice. And once we are done with the due diligence, we are okay with listing the company. We create an invoice discounting deal around it, put it live on the platform, and you can all check it out today if you haven't already done that on tapinvest.in. And there, an investor can go and invest a part of that invoice. So let's say if it's a 1 crore invoice, you can start investing with, let's say, about 50,000 or 1 lakh rupee ticket size, and you can invest as much as you want. To the proportion of your investment, you will have the stake in the receivable amount. So if that invoice of 1 crore, we raise about 80 lakhs, let's say we discounted, just hypothetically saying, at a 20% rate, then at the end of the tenure, at the end of 60 days, you will get a 20% upside on your investment. So that's largely how the invoice discounting product typically works with Tap Invest. Currently, the way we are doing it is we list one single company invoice at a time. And when you're investing, the entire 50,000 goes into that single company invoice. At the end of the tenure, you get the returns from that particular company. There can be multiple investors participating in an invoice, but the company is one on the other side, as you can see in the diagram on the right-hand side. Now how have we tried to make this better? Over the last 1 year odd, since we launched invoice discounting, we have seen tremendous positive response for the product. Every month, almost every month, we've seen the transaction volumes doubling or tripling. And so therefore, we are fully convinced that this product is truly powerful for investors who want to park their money for short tenure and want to make a decent return of 13 to 14%. But then what was the need to improvise it or make it better? The need came when we started talking to a lot of people like you, people who are already managing the wealth of a lot of retail investors in India. And one feedback which was constant was a lot of you wanted a product where when an investor is putting in that 50,000 rupees, it's not just going into a single invoice of a company, but it's actually getting diversified across multiple companies or multiple invoices. And we heard that and we found that concept to be very interesting, where one can get the benefit of diversification with just a minimum ticket size of 50,000. which otherwise you would have to probably invest about 5 lakhs or 10 lakhs to diversify it across multiple products with a minimum 50,000 ticket size investment. Now, in this case, since we got this feedback, we thought, why not bundle it up in a way that when an investor is investing a 50,000 ticket size, it actually automatically gets diversified across multiple companies. And that's exactly what Multi does for you. So Multi is a diversified investment invoice discounting product, wherein at the back end, there are multiple companies whose invoices are listed. So when an investor invests a certain amount, it gets automatically distributed equally amongst all those companies. When you invest in this deal, you get to see who are the companies at the back of it. You get to understand what are the customers against whom these invoices are raised. You can see the details about those companies, and then you can make an informed decision about investing in that product. With this, we are able to reduce the risk, because if let's say in a company some invoice is getting delayed by 1 day or 2 days, it's your 100% returns are not impacted. Probably a part of that of your overall portfolio only is getting impacted. Plus, with the smaller ticket size, you get to diversify across multiple companies. We are enabling a very streamlined investment flow. It's just a single click investment, and everything gets taken care of automatically at the back end. And you get to invest in multiple blue chip companies at one go. This is a simple diagrammatic representation of what we just discussed. So on the right-hand side, you can see that earlier there was just a single company who was coming to tap with their invoices, and multiple investors were investing in that single invoice. Now, with the multi-product offering that we have, there are multiple companies who are together coming and giving those invoices, which are being listed on the platform. And all these multiple investors are, with a single investment, getting to diversify their investment across these multiple companies. With this, we can assure that there are two very strong advantages that you're getting or your investors are getting. One is the default mitigation is very high. We are already taking e-NASH mandates, post-dated checks, undated checks for all these companies. Plus, now on top of that, there is a third layer of security, which is diversification, which adds up. And secondly, it also helps us or we anyway have a very strong delinquency management system. We have automated system of reminders, automated emailers, or messages that goes on. With this automated system, it'll be easier for us to track the repayments timely and ensure that all your returns come back on time without any delay at all. I'll just take a quick second to maybe give you a glimpse of the product that we've built. This is the screen that you can see. I will probably just quickly leave the link to the website here in chat. It's partner.tapinvest.in. So if you want to onboard or try this product out, if you want to open it up for your set of investors, you can quickly visit this website and you'll be able to log in with your phone and OTP. Once you log in, you'll see that in the deal section, you can see the multi-invoice discounting. It is not live yet. We will make it live tomorrow. But you can start accessing the platform and you'll be able to see some of the other deals which are live. Today, we just wanted to take some time for us to just introduce you to this product. And if you have any questions, we'll be happy to take those. And tomorrow onwards, you can start toying with the product. You can play out with it. You can share your feedback, and we'll be more than happy to keep improvising on it. This is how the product looks. You can see that here the minimum investment is about 1 lakh. Maturity date is 2nd June, just hypothetically. Net yield, which we are offering here, is about 13% and you can see how much amount is raised out of the total target raise amount. On the right-hand side, you can see the invite link. Using this invite link, you can actually invite a lot of your retail investor participants onto the product. And using this link, they can actually sign up on Tap Invest. They can create their own account and start investing from the product directly. You can also make the investment on their behalf. We'll be happy to help you out. Whoever is interested in exploring this, we'll be happy to help you out individually or one-on-one with the mechanics of how this whole process will go. But here is just a quick glimpse. And as you can see, when you double click on the multi deal, you'll be able to see which are the companies in the background. You can just ignore it's showing Agreezy everywhere, but ideally it'll be different companies with an equal split. Here we have 24% split. If you invest 1 lakh, you're getting your returns, you know when the payout date is, and In a simple click, you can create the order for your investor, and they will be able to see these investments in their own dashboard, as well as you can also see their investments in a single consolidated dashboard at your end. So it's a very streamlined process, very streamlined journey that we've tried to build. And I'd like to thank all the partners and all the wealth managers, IFAs, who have helped us out in brainstorming and bringing this product alive. I think it would have been very difficult for us to do it without your constant feedback loop and your support. So that has been very instrumental. And we are committed to keep hearing you, keep listening to you, and keep improvising the product basis the feedback that we get from you. So we'll be very excited to hear what more you have to say or you have to offer in terms of your experiences and your feedback. But this is largely it that we wanted to share with you today. And we'd be happy to take up questions that any of you might have. Please feel free to drop them in the chat box, and Soumya will help pick them up and we'll be able to answer them. Thank you so much. Soumya, over to you. Maybe we can start with the Q&A.
Hi. So the floor is up for Q&A for sure. And I Soumya, diversification with just 50K sounds amazing to me. I have this one question. Can I pick and choose companies, or will it be predefined?
So in the bundle that you will see, which is multi, there will be already selected set of 8 to 10 companies. When you invest 550K, it will automatically get diversified across those companies. So right now, you don't have the flexibility of picking and choosing which company. It'll just be a bundle provided and it'll automatically get diversified.
Okay, sounds good. So Rajul Goyal asks, this weightage has been divided equally among all the companies who are raising the funds?
Yes, it's equally divided amongst all the companies.
And Sanjay wants to know if we have any history of default till date.
There is no default in case of invoice discounting so far. We've had a couple of instances where there was a delay by 1 or 2 business days because of certain operational challenges at the end of clients. But we are able to accommodate it, and there is an IRR compensation which is offered to the investors if in case it gets delayed by 1 or 2 days. But there's no default as such so far.
Sounds good. So Devang has this question. Do we have recourse on the invoices or any insurance?
There is a recourse on the client who is listing the invoices with us. So in addition to the customer who is supposed to make the repayment against those invoices, there is a recourse on the client as well who has raised the invoices on the customer. Currently, we are still exploring a few insurance products around this. Usually, the trade credit insurance which is available in the market is for B2B scenario. Since in this case, there is a B2C arrangement wherein a retail investor is investing in the invoices. We are yet to come across a product which can cover this kind of an insurance. But we are talking to a few insurance companies trying to figure out if we can structure something for our unique use case.
Okay. And Nilesh wants to know if we have options for investors to invest for 1 year or 6 months in ID.
Currently, the tenure that we have is between 30 days to 90 days. Usually, we don't go beyond that because a lot of investors are not interested in parking for a longer tenure. We have other products like bonds and asset leasing for it, but invoice discounting, we are restricting up to 90 days max.
Okay. Sure. I see no more questions in the comment section. Should we wait for a few minutes, or we can wrap
Yeah, I
up
think
this?
maybe let's give a couple of minutes. If anybody else has any questions, feel free to ask us. Otherwise, I think that's
Okay.
all I should say.
Oliver asks, oh wait, it's not a question though, but he said that AltGraph had a few defaults.
Yeah, so yeah, I think there have been a few instances that we know of in the industry. With TAP, at least with this product, we've not seen any defaults. As I said, there have been a couple of cases of delays, but we've been able to manage that with IRR compensation.
And also there is this request wherein this person Tushar wants a demo for the website when we launch it. Sure, yeah.
Sure, sure. We'll take a note of this and Tushar will arrange it for you.
Yes. Cool. So in case of no more queries, we can wrap up this question, Soumya.
Sure, I think it was lovely having all of you today. And we actually wanted to give a slightly larger notice period, but I think it was a slightly short notice period. We just informed about this yesterday itself. But we'll
Yeah.
keep doing these webinars more often. And you let us know what topics do you want us to cover, what do you want us to explain more. We'll be happy to do that. And we are actively looking forward to your feedback as you start using this product. We'll make it live tomorrow itself and look forward to hearing from all of you. Thank you again so much, and we'll hope to see you soon again.
Soumya, so Tushar has one more question, wherein he wants to know about the risk management process for invoice discounting once we have launched any company on a platform.
Post-launch or
Yes,
pre-launch?
post-launch, once you've
Okay.
launched a company.
Okay, so usually our risk analysis is split into two parts. One is the upfront, the initial risk analysis, and the risk monitoring. Risk monitoring is something that we do on an ongoing basis. So every month we collect details such as the financials, bank statements, GST pulls, CIBIL pulls. We usually refresh on a quarterly basis. So basis these continued refreshed data, we update our risk models to see how the company stands compared to when we evaluated it first. Basis the performance improvement or decline in the performance, we take calls on whether to continue with the current exposure levels, whether to increase exposure, reduce exposure, so on and so forth. So that's usually how the monitoring process works. And obviously, a very key factor is the repayment behavior that we capture.
And I see more questions coming in. So Oliver asks if in multi, how many company invoices will be a part of a single client's investment?
So for a single client, usually we don't have any bar in terms of number of invoices. It can range anywhere between 1 to 5 to 10 also, depends on the quantum that we are listing. Sometimes it so happens that a single invoice is sizable, so we don't require too many invoices. But in certain cases, the quantum is slightly higher than one invoice amount. So in that case, we have multiple invoices. But the key feature of multi is that you get to diversify across multiple companies. One company can have multiple invoices, but here you're actually getting to diversify across companies as well. So that is how you're able to diversify your risk.
And what's the profile of clients?
These are usually, we typically go for SMEs who are making an annual turnover of anywhere between 20 crores going up to 200 to 500 crores. These are profitable businesses having, or if they're not profitable, they will have at least a 12-month runway. They would have raised funds from a tier 1 VC. And we look for various other parameters in terms of the ratio health, the debt to equity ratio, and several other receivable turnover ratios. But the basic filters remain that the turnover criteria and the profitability or the cash flow criteria that we have.
Sure. And Amit asks, will the IRR of all the companies be same or it will differ as there are multiple companies invoices?
The IRR will differ from a company to company. However, the overall IRR that you will get in the multi-product will be anywhere between 13 to 13.5%. But it can definitely vary company to company.
Sure. I see. Okay, there is one more question. I guess this question has been answered. Tushar asks, till date, is there any default happening? Has there any default?
Yeah, so I think same. So default, no, but there have been instances of delay where we've tried to capture it with IRR compensation.
Okay. So I see no more questions coming in, and
Maybe let's just give a couple of minutes just to see if there are any more questions.
Tushar again asks, how many days delay payment? Tushar, can you please elaborate on that question? Thank you. And then Vishal asks, what is the minimum amount of investment in this product? I guess she mentioned 50K. And yeah, this diversification opportunity with just 50K sounds amazing to me as well.
Yeah, so we'll keep it anywhere between 50K to about a lakh. That's how we're planning it out. But again, happy to hear your feedback. 50,000 is something that we have across the board as minimum ticket. But between 50,000 to 1 lakh is what we're considering for this product.
And can NRIs invest?
Yes, NRIs can invest. The only requirement is that you have to have that NRO account. You can create your account on Tap Invest as an NRI and you can start investing.
And is it a P2P product?
It's not a P2P product because here on the other side there are no individuals and technically it's not borrowing or lending. It's an invoice discounting product with the only difference being that as a retail investor also you can participate in these invoices, and on the other side you are essentially discounting the invoices for a set of businesses. P2P is a very different product where essentially you're lending some amount which gets diversified across a number of individuals and you don't know end of the day who your money is going to. This is not like P2P.
Sure. Should we wait for a few minutes more?
Yeah, let's give it a couple of minutes. We're hearing a lot of questions, so I'm sure there are many more to come.
Vishal asks, is this product registered to RBI?
No, this is not an RBI registered product because technically we're not doing lending or borrowing. Think of it like buying an asset, which is, let's say, a receivable of a company. And when you buy that asset, all the rights linked to that asset get transferred to you. It's similar to buying, let's say, a car or a house, but here the asset type is different. So it's an asset, it's an investment into an asset.
So Tushar asks, does that mean if the company have not made the payment on maturity date, then within how many days the company pay?
So usually, as per the credit period, let's say if it's a 45-day or a 60-day credit period, the customer is supposed to make the payment to the client within that credit period, and the client then makes the payment to the investors via TAP. However, in some cases, there could be a couple of days, 3 days delay from the end of the customer. In that case, the client is still liable to make that payment to us. And usually we are able to recover that amount within a day or 2 days of delay. And that's how we transfer that money to the investors along with whatever is the compensation amount.
And how to protect our principal in this product?
So so there are certain security measures that we've built in. The standard measures that are out there in the market, for example, there is an e-NACH mandate, there is undated checks that we collect. These are security mechanisms which get activated if the client fails to make the payment in a timely manner. We usually get encash these instruments and then try to recover from there.
Soumya, I think we can wrap up the session.
Sure. I think it was lovely having all of you, and we would look forward to your feedback. Please feel free to reach out to us, write to us, and help us improve this product even further. Thank you so much for your time.
Soumya, I see a few more questions coming in already towards the fag end. So Vikram asks, as a partner, I am bringing my clients to a platform. What is the confidentiality measure on the platform?
So I'm assuming that you're talking about the confidentiality where your client or your investor remains your client. That will be intact. For all the investments that this investor makes on the platform, you will be compensated as per the commercials that we normally sign with our partners. We do have certain campaigns through which we reach out to the investors. If you don't want us to directly reach out to your investors, we are happy to accommodate that. But normally, most partners that we're working with are completely okay with us reaching out, because end of the day, they are getting the revenue share of all the investments that they're making. So you will rest assured you'll be aware of everything that we do in terms of campaigns or reach outs or how we're using that data. But if there is any special request, we're happy to accommodate that.
Oliver asks, how would I know that a bill is not raised to clear a previously raised bill?
So usually when an invoice gets discounted, the cash flows are disbursed to them. Uh, Usually the avenues where they deploy these funds is to procure their raw materials or clear out their working capital requirements. We have an exposure limit concept with all the clients, wherein, let's say, it's similar to how credit card works. So if you're giving a 1 crore exposure limit, and that 1 crore is up to that 1 crore, they're free to raise as much as they want. But as soon as that 1 crore is hit, they will have to start making those repayments, and only then the limit gets unblocked, similar to how credit card operates. So that's how we try to ensure that that those kind of practices are not undertaken.
And Vishal wants to know about the commission structure for partners.
So we will, what we'll do is Vishal will reach out to you separately. If you're interested in getting onboarded, one of the RMs will get in touch with you, and we'll share all the details of the contracts and commercials with you offline, if that's okay.
As a follow-up question, Oliver asks, so he had asked about the previously raised bill. Now he asks, they can have similar limits with other lenders too, hence at gross level, a higher limit.
Yeah. See, that's a very common practice across the lending industry. A company does raise from multiple lenders, and everybody has bases their own comfort level. They'll have their own exposure limits that they will extend to them. We can definitely not control what other lenders are providing to them, but we definitely can control the exposure limits that we share with them. And anyway, on an ongoing basis, we do the monitoring, so we keep adjusting it basis how the company is performing. But this is a very standard practice, and it's actually good if there are multiple lenders lending to a company, because that only means that the company is good credit worthy.
Okay. I see no more questions coming in. Thank you for this session, Soumya. It helped a lot in understanding Multi and our new partner platform. I guess we'll wrap up the session if you say.
Okay. Are we sure there are no more questions coming? Otherwise, we can give it like a couple of minutes. I think let's maybe wrap up for now, and we'll be back again with more insightful webinars for you. Try to break down concepts for you. Happy to hear from you what you want from us, and we'll be there to help you out. Thank you so much, everyone. Thanks, Soumya, for organizing this. Thank you.
Thank you.